Welcome to Questions with Kenner. My name is Kenner French. I'm with vastsolutionsgroup.com. As you can see, it's a vastassetdefense.com company. You're going to learn a little bit about us, me. One of the things we're going to be talking about ways to help you as an entrepreneur through questions that we've received into our office at vastsolutionsgroup.com over the last little bit. This is going to be fun. We're going to make it fun, and we're going to make it pretty quick, so please bear with us. By the way, at the end, there's going to be a little bonus. Real quickly, we at vastsolutionsgroup.com are a co-founding partner of vastassetdefense.com, led by Bob Bloom, an attorney at Asset Defense Team. And we came together basically to help entrepreneurs, to help them in a way that, well, they haven't been helped, because so many small entrepreneurs, solopreneurs, real estate investors, with a pretty good net worth, but people who want to expand, grow their business, but there aren't resources out there. And we're going to get into a couple of resources, but more than anything, we're here to answer questions that have been coming into our office over the last little bit. Here you see Bob Bloom at Asset Defense Team, an attorney, well respected. I consider him the godfather of asset protection in the United States, has business all over the country, just like we do at vastsolutionsgroup.com. Liliana Faulkner, she does some of the general management at vastsolutionsgroup.com, and we are supported by a huge team, both at vastsolutionsgroup.com and also Bob's team over at assetdefense.com to include Vast Asset Defense. Let's get to it really quickly. I want to help you as an entrepreneur. No reason for me to talk about myself, although I love talking about myself. Artificial intelligence. Let's get some questions. What AI systems do you use at vastsolutionsgroup.com, Kenner? We use our own system. We started in 2018 called Einstein. Again, Einstein. We started doing research on AI back in 2010, as a matter of fact. So we're not new on the block. We've been doing it for some while. Now, what I would also say is, not only do we use our own system, we use other systems. DeepSeek is one other example. Another example, ChatGPT, one of the big name LLMs, as it would be. And then also, Perplexity, Alibaba, the list goes on, but our main one we use is Einstein, our own system. And Einstein served us really well. It's helped us do publications, presentations, and the list goes on. But what I would say, especially for tax mitigation, we've been able to lower taxes for clients because we've been using artificial intelligence for so long. Are we experts in artificial intelligence? It depends. A lot of the answers to these questions, there's going to be a large number of questions, by the way, that are going to be helping you, the business owner. Are we experts? The answer to that is in the general scope of things. The answer to that is yes, without a doubt, since we've been doing it for so long. Number one. Number two, though, AI has been around for a lot longer than people realize. A guy named Alan Turing is the one who popularized the term, if you will, popularized it back in the 50s, 1950s. And basically, there are so many people who've been doing, artificial intelligence for many, many years who are ML or machine language experts. So I would say relative to some of them, maybe not. Though we did start the process working with small business owners years ago, and that put us at the forefront. And as a number of people have said, we were at the forefront of artificial intelligence for small business owners in moniker. I'm very, very comfortable with saying, yes, we're at the forefront of the AI revolution, even before the, most recent popularity craze that's hit us. Now, will AI really help me with tax and finance? Yeah, I will say so without a doubt, because we've been able to learn how to massage, artificial intelligence with respect to tax and finance over the years. It will help you. It's helped us to lower tax liability for our clients. And that's the key. We can lower tax liability. I don't care if you're using AI or what have you. If someone starts out with a portfolio of, let's say, 100,000, and they don't care about taxes, so they start out with that $100,000 portfolio. Great. Okay. Let's say they get an 8% rate of return. Great. But now let's say on the flip side, someone's been paying attention to taxes, lowering taxes with respect to artificial intelligence, machine learning, et cetera, using our Einstein system as an example. We lower the tax liability, let's just say by $20,000. That means someone's going to be starting out with a $120,000 portfolio versus $100,000. So yes, AI can do that, and it will help you. If people are paying attention to their taxes a little bit more so than they probably think that they should, they will potentially lower their tax liability, thereby increasing net worth, being able to buy more property, et cetera, et cetera. Can I learn AI on my own? This is going to surprise you. In my thought process, the answer to that is yes. You should be trying to learn artificial intelligence. Some people say it's not going to do away with my business. I don't care if you think that or not. You should be using artificial intelligence for your personal life, even if you're not using it in business. It's not a bad thing to get a general understanding of AI, because everyone in your business, every single person in your business should be using AI. And if they're not, there's an issue. It will make you more productive. A lot of people say, oh, AI isn't going to take my business. Well, no, it might not take your business away, but it will potentially take market share. If it doesn't take your job, someone else who, meaning AI itself, if it doesn't take your job, someone who knows AI potentially could be taking your job. So what I would say is it makes sense to learn artificial intelligence on your own. Now, I'm going to throw this out. This might be a little bit of a push, but I'm going to throw it out. What we suggest, or what I suggest, specifically me representing myself versus maybe even the company, or maybe even the wider network of vastassetdefense.com, what I say is spend at least getting started 1 hour a day on artificial intelligence, on AI. And by that, I probably mean large language model. You will be so glad you did. Try, as an example, whatever, DeepSeek as an example, or ChatGPT, whatever the case is, 1 hour a day with different ones. Figure out which ones you're comfortable with, or which one you're comfortable with, and then you'll feel that much better and more comfortable because you've utilized artificial intelligence to teach you. You can come to us. Believe me, people are now coming to us and asking us for artificial intelligence help. But what I would say is, if you can learn on your own, you're going to be that much better. That's the power of artificial intelligence. It puts the power in your hands, the person who has the artificial intelligence model in their hands. You could be just as smart as us as far as artificial intelligence. Sure, we know how to massage it, et cetera, the question to ask, the prompts to put in, as it were. But at the same time, if you could jump to that level, you can utilize artificial intelligence in a way that you never expected. Now, I love the fact that we're using artificial intelligence. We started, by the way, vastsolutionsgroup.com started in 1969. We were just a typical, run-of-the-mill finance, insurance company, et cetera, et cetera. 2006, I took over, became a little bit more technologically advanced. And then in 2010, really in 2014, when we started really using artificial intelligence, not our own model yet, that's how we knew that we were taking it to the next level. We were lowering tax liability. We were helping clients with their finances like never before because we were using artificial intelligence. You can do that just as easily. It's so much easier now than it ever has been to have a pocket expert in your pocket, if you will. Anyway, hopefully that answers some of the questions you might have as far as artificial intelligence. Let's go on to the next grouping of questions. That'll be tax questions. Give me one example of something that will lower my tax liability. What I would say is, we have a number of CPAs, we have a number of tax attorneys who work in the office. Everyone's going to say, well, it depends. But if you wanted me to give one cheap example that can lower your tax liability without knowing your situation, for you listening or watching this, I'm going to say qualified plans. A lot of people don't realize that qualified plans, Ks, profit sharing plans, defined benefit plans, cash balance plans, can potentially lower your tax liability. Sometimes you can even, after the year end, let's say February 1st, you could go back and set up a qualified plan for the prior year. A lot of people don't think about qualified plans. For one, increase in net worth, and then two, lowering the tax liability. Those are two things that really, really are really important. And one way of doing it, qualified plan again, 401k plans, profit sharing plans, defined benefit plans, cash balance plans. Those are just one suggestion or one example of something that potentially can lower your tax liability. On top of that, what I would say is go back to your advisor. Let's say it's a tax advisor. Ask he or she what they think will lower the tax liability. But that's one of the questions that we get into our office. Give me one example of something that will lower my tax liability. I would say a qualified plan. What is my chance of getting audited? By the way, you're asking that question. That's a little scary for someone who's answering. Why? Well, because you're trying to skirt something. Well, hopefully that's not the case. Now, it's just for entertainment purposes, as this whole presentation is for entertainment purposes. Chance of getting audited depends on what you're doing, what your structure is. Number one, what strategy you're employing, et cetera, et cetera. Or the more things you do that potentially are red flags for the IRS, that increases your percent of audit. What I would say is Even with that being said, generally speaking, chance of getting audited is about 1% in general. So out of every 100 people, someone potentially could be audited once out of 100 people. So that's the chance. But it really depends. Again, if you're doing something really, really aggressive, that increases your rate of audit potential. If you're doing something run of the mill, really run of the mill, probably won't get audited. It really depends on the circumstance. But in general, I'm going to say 1%. Again, this is all for entertainment purposes. And hopefully you're not doing anything that would get you into hot water with the IRS that's running around local regulations, state regulations, federal regulations. Everything we talk about, by the way, I should note, here at vastsolutionsgroup.com, we suggest that people do things that are moral, ethical, and in line with business mores. Now, we do have something in our terms and conditions. If someone asks us to do something illegal, and we have done this, we have fired clients for when they've asked us to do things illegal, you will be fired. You will not be a client of vastsolutionsgroup.com. I keep hearing about captives. Are they good for reducing tax liability? One, they're really good for lowering risk for an entrepreneur, a well-heeled entrepreneur. Number one. Number two, are they good for reducing tax liability as a secondary element? I would say the answer to that is yes. A lot of people are now looking at those captives or 831Bs or maybe even a micro captive for lowering tax liability. It really depends on the circumstance, but I would say generally speaking, they are a good thing for potentially lowering tax liability. Maybe even going up to my first question and answer, qualified plans are a good way of, increasing net worth and also reducing tax liability. Same thing for, a captive. Very, very good for lowering risk and really for potentially lowering tax liability. Usually they come after deploying or utilizing a qualified plan. But what I would say is, depending on the circumstances, as any good consultant would say, it really does make sense to at least look at the potential of a captive or an 831B. If someone has a lot of risk and they're naked, if you will, as far as risk goes, or as far as, taking care of their risk, then yes, I would 100%, you should at least look at a captive. And by the way, if your advisor doesn't know anything about captives or 831Bs, please give us a call. Or at least, go to our website. We have a lot of resources on our website because I think captives are something that a lot more people should know about. Although, at least more people are now, calling into our office, emailing us with questions, et cetera, on social media, as a matter of fact, because they're interested. But just a lot of people do not know about captives, and they really do work. It is after year end. Are there things I can still do with to lower my taxes? I'm going to go back up to qualified plans. I'm going to go back to late election S corps. There are some things one can do even after the fact, even after tax liability. I should say after year end to lower tax liability. A lot of people don't realize that, but ask your tax advisor. Reach out to us. We're here to help you at vastsolutionsgroup.com. Ask protection questions. These are mainly for our attorneys at vastassetdefense.com, but I'm going to answer some of these questions because we get a lot of the questions. We farm them out to our attorneys that are in-house. But what is the single best asset protection strategy? I've said it a number of times. It depends. But number one, I would say an LLC, limited liability corporation, is truly, company, is a really, really good strategy. What does it do? Let me explain. I was explaining this to one of my interns. What is an LLC and what does it do? It's put together at the state level. It's an entity that's usually started by an attorney. You can go online and put one together, as a matter of fact, but usually it's an entity that's put together that it silos the risk. So let's say you have a property, and let's say it's worth, let's just say it's worth $1 million, right? And you have $500,000 of instant equity. You bought it really low. Great job, right? You have a $500,000 loan, $500,000 of equity. If someone slips and falls in that LLC, what happens is, well, sometimes someone might want to sue you for in that example, $500,000, right? Because remember, I said you have equity. So meaning that's yours as the owner in effect, or the manager of the LLC. Well, if you are at fault, if the property and you as the manager, as an example, especially if it's not properly structured, if someone sues you, they can go after the $500,000. If it's a properly structured LLC, can they go therefore after another LLC, even if it's owned by you? If it's properly structured, the answer to that is Right. You guessed it. The answer is no. They probably won't be able to pierce the corporate veil, as it were, and go after the other LLCs or even your personal assets. So in that example, you have $500,000 of equity. Someone falls, slips and falls. If it's your fault, they go after 500,000. They get it. Again, they won't be able to go after the other assets that you own in other LLCs or in your personal assets because you've siloed that risk into one, in this example, LLC, as long as it's properly structured. That's a big thing what Bob does at vastassetdefense.com and also at his group, again, the underlying India asset defense team. They've been around for years. He's been around, he was with American Airlines. He was the one who was protecting American Airlines from the corporate side when there were so many lawsuits. And at the same time, so now he's switched to really the good side, if you will. He's helping now the business owner, the entrepreneur, the solopreneur to help making sure that they don't get sued. And if they do get sued, well, he protects their assets. Hence the reason that we did the strategic alliance with him. What I would also say, by the way, this is very important. What is the single best asset protection strategy? The strategy is, well, not to get sued in the first place. So if you have a good asset protection plan and structure in place, well, and someone's looking at a lawsuit or looking to sue you, if you have a good asset protection strategy in place, they might not go after the lawsuit in the first place, that's even the best thing. And some people say, well, wow, I'm spending a lot of money on my asset protection strategy. Well, think of it as insurance. I'd rather have good insurance just in case someone doesn't come after you. And that is why we decided to do business with Bob Bloom and his group, because the way he puts together his structures, again, the godfather of asset protection, it's people can see that from the outside looking in. Lawyers can see that. Potential litigants can see that they've put together a good plan. They probably won't move forward with the lawsuit because think of it. The lawyer wants to, on the litigant side, the lawyer doesn't want to, put in a bunch of time and potentially not get any money, get his or her 30 or 40%. Well, if you have a good, properly structured asset protection plan in place, they're not even going to go after you. So that's what I would say is the best single asset protection strategy. And then on top of that, having usually it utilizes an LLC in its structure. How do registered agents play a role in asset protection? So let's say as an example, and we do registered agent services. So let's say as an example, let's say, I live in Washington. Let's say let's say I have a business in, let's say Florida. I don't have an address there. I don't know anyone there, et cetera. But to have an entity in this example in Florida, an LLC, you have to have someone who could basically stand up for you and run the corporation or answer for your corporation in Florida. Usually they're called commercial registered agents. They play a vital role. Some people say there's not that much money that has to go into it because it's a low cost expense. True, it is, but you have to have someone who could stand for you from 8 to 5 or 9 to 5, depending on the state, and represent your company. And if there's a lawsuit, paperwork, email, et cetera, that comes in relative to your business that you have to answer, you have to have someone there from 8 or 9 to 5, depending on the state. And in that example, what happens is a commercial registered agent does is when they get let's say a service of lawsuit, they send it to me from Florida to Washington in my example. So that's how registered agent plays a role. Now, if there's a fall down, they don't do a good job as a commercial registered agent for whatever the reason. What happens? Well, I could remember how I said the example of that property of $1 million. Well, they, at $500,000 of equity. Well, if they're not doing their job as a registered agent, they mess up. What happens to me, as a matter of fact? Well, this is not good. What happens to me? Someone could pierce the corporate veil. If I didn't have a properly structured LLC in this case with a good registered agent, the court would potentially say, well, this guy was just running a in effect, a pretend entity. So that 500,000, in my example, the lawsuit, they get that 500,000, then they could go after all my other properties or my other LLCs, and then potentially after all my personal assets. Having a commercial registered agent or registered agent that is truly disciplined makes a huge, huge difference. We have well over 1,000 clients in our registered agent pool, and that makes a huge difference when we're talking about how we run our business as investors, because I'm just an investor, by the way, so I understand exactly what you guys are all going through. it makes a huge difference because we know exactly what we're doing as far as a registered agent. We are entrepreneurs as well. We understand your shoes. And if you don't have a properly structured LLC, insofar as having a good registered agent, it opens you up to lawsuits. And you do not want that because so many people understand that you're a real estate investor and you have a lot of dough. You want to make sure that you have a properly structured LLC in this example, and you have a good operating registered agent. Can I be my own registered agent? The answer to that is yes, with a caveat. You have to be open and be able to answer a lawsuit anywhere from 8 a.m. to 5 p.m. or 9 a.m. to 5 p.m., depending on the state, every single day. Are you going to take any vacations? Yeah. What about, are you going to check your email on a daily basis? Yeah. Well, probably not, right? So I'm going to say yes, you can be a registered agent, but in most cases, it does not make sense to be your own registered agent. Plus, on top of that, let's say, you have a lawsuit and you don't answer that lawsuit, automatically the court, I've seen it with my own eyes, the court automatically gives the prevailing side, in this case, the litigant, the money. Bad. Because then anyway, you end up losing everything just because you didn't have a, whatever, $300 a year service. How expensive is a good asset protection strategy? Depends on the circumstance. I've seen asset protection strategies, as low as $1,500, even lower, I guess, all the way up to $20,000. It depends on the service and what you're looking for in the asset net worth, et cetera, et cetera. What I would say is email us, and I'll give you some contact information. We can go over the specifics. It really depends on what you're looking for. I can't even come close to saying, to giving a number on that one. Retirement questions. How much should I have in retirement? Really tough one. What I would say is, let's say you've got $1 million. There's this study that was done years and years ago, Brinson B. Bar Hood. Basically, it shows you won't run out of money if you're a 62-year-old person and you're taking out 4.2% of your portfolio. So let's just say it's 4.26, whatever the number is on $1 million. Let's just say it's $1 million. So that's the amount of income you're going to get, right? And not run out of money. If that's what you need, that's going to work out. That's taking into account mortality. So it really depends on the circumstance, but think of that number, 4.26% of whatever amount you've saved. If you're 62 years of age, hopefully you won't run out of money. That's in general. That's a huge study. It's a study that was done years ago, and it still is used today to define how much money people need in retirement. Also, by the way, it depends on the expenses. It depends on a number of things, but on average, that's the way it works. You're going to get a gross amount of 4.26% of a portfolio in pretty much any market instance from 1927 to recent years. Should I have guaranteed income in retirement? As a retirement professional, I would say yes. The higher you're guaranteed, the more you're guaranteed income in retirement, the better off you are. If you have the chance to get guaranteed income, I mean, truly guaranteed income, and there are ways to get guaranteed income, I would suggest you going down that road, especially as an entrepreneur. If you're selling your business, whatever the case is, I would say go ahead and go for the guaranteed income. Should I take my non-qualified assets out and then the qualified? We get this one all the time. I just had this one 2 weeks ago. Yes. Generally speaking, because the taxation is totally different on non-qualified assets versus qualified. So I would say, generally speaking, take your non-qualified assets out. Let me define that real quickly. Let's say you've written a check for an investment. You put in whatever, $100,000, now it's worth $200,000. Yeah, I would say take that out first because you're taxed differently than you are in qualified plans. What are qualified plans? When you put money into an IRA, 401k, profit share plan, I'll stop there to be simple. In that case, then you're taxed at whatever your income tax rate is. So meaning, let's say you're taking out income from a qualified plan, let's say from a 401k or an IRA down the road, your tax liability, your tax rate is low, relatively speaking. Therefore, you'll be hit with taxes a little bit less so than you would have otherwise. Also, qualified plans, again, IRAs, 401ks, they grow tax-free. It's not every year. It's not as though you have to pay taxes. Generally speaking, on qualified plans, when you take money out, that's when you're taxed. Okay. And by the way, sometimes it does make sense to take out qualified plans first or last. It really depends on the circumstance. But I'm just in general going to say non-qualified assets take out first, then qualified ones. should I invest in crypto near my retirement? I was on a board a while back and they asked me, what percent do you think people should have in crypto? Again, it depends. But, everyone laughed at me as a crypto board. I said about 5% or whatever you can throw away, basically. Sure, your rate of return on crypto, generally speaking, has been better than most asset classes. By the way, I started getting involved in crypto in 2010, so I feel like I've gotten pretty well a pretty good understanding of crypto. Now, what I would say though is you never know what's going to happen in crypto. You never know. You never know what's going to happen in Bitcoin, ETH, et cetera, et cetera. So what I would say is it's going to be a risky asset on the upside and it's going to be a risky asset on the downside. It should be a part of the overall asset allocation process. You've got to meet with your advisor. You've got to make sure that your advisor understands your specific circumstance, because you don't want to put 100% of your money in crypto into a specific crypto and lose it because it's gone to zero. So what I would say is, as I would say with so many things, it really depends, but I'm going to make the comment that if you as an investor, you as an entrepreneur, you as a retiree, think you can put in whatever small percentage of your portfolio, it's a bonus if it goes up, that's the amount that I would put in crypto, but it really depends. So I want to talk about property loan questions. Yes, we do commercial property finance here at vastsolutionsgroup.com. We're doing it in a big way, as a matter of fact. Are property loans available nowadays? Believe it or not, the answer to that is yes. So many people, we get a lot of calls. It's hard to get loans. We have access to our own clients, number one. Also, number two, over 750 banks. So the answer to that question is, yeah, there's banks out there. I don't know. It's weird that people are thinking, loans aren't out there, but they are out there. What is a hard money loan? If you go to a traditional bank or a number of traditional banks and you can't get financing, sometimes there's groups out there that will offer loans, less paperwork that would be normally required of a bank, let's just say, traditional bank, traditional credit union, but they offer much higher rates. So meaning if you want to loan on, and we actually help in this regard, if you want to loan on a $10 million building, you only have $5 million, you can't get, for whatever reason, you can't get a loan through traditional means, through traditional banks, as an example. We have either banks, private lending banks, or some of our clients who are interested in potentially helping in that case. That's a hard money loan. If you can't get traditional financing through traditional means, that being a bank, credit union, as an example, there are groups out there or investors out there who would offer a lot higher interest rates as far as the rate itself, maybe even more points, but at least you're getting the loan, and hopefully if all pencils out, it makes sense. That's a hard money loan. Do I need perfect credit nowadays for loans? Going back to my point about the hard money loans, the better your credit rating is for specifically commercial properties, the better off you are. But if you don't have good credit, especially nowadays with what's going on in commercial properties, as an example, or any properties, if you're underwater, as an example, yeah, you could still get loans. They'll still out there. I'll revert back to the hard money loans. There's people out there, there's groups out there that are, traditional loans are out there and hard money loans are out there, even if you don't have perfect credit. But if you have perfect credit, it's that much better. There are lines of credit available for properties, especially commercial properties. The answer is yes. We took care of a $11 million line of credit for a client. That guy was going out and buying big single family residences. So we got him a line of credit, $11 million. Actually, sorry, $12 million. Anyway, there are lines of credit for people out there for both commercial properties, which people don't realize, and then also for residential homes as well. R&D tax credits. This is one of the big things. A lot of people ask us here at vastsolutionsgroup.com, what are R&D tax credits? What are R&D tax credits? Wow. So on the state and federal level, the government wants us to, as entrepreneurs, to be innovative. In trade for that, they give us research and development tax credits. Better than deductions, they give us money, us as entrepreneurs, money to push the envelope. There's mainly 4 criteria, but there's a number of different criteria depending on the circumstance. But you as an entrepreneur, if you're pushing the envelope, you might as well try to get some R&D credits. A lot of people don't know this. I was talking to an extremely senior CPA, and she had no clue that R&D credits were out there. That's a whole nother situation. But There are R&D credits. And if you're already doing the research, especially with the technology push of today, innovation push of today, then you probably are due some money from either the state government or federal government. By the way, even localities sometimes offer, or municipalities offer R&D tax credits. Now, this question just was asked on Thursday. Do DeepSeek, ChatGPT, Alibaba, etc. qualified for R&D tax credits? Now, using those, generally speaking, the answer to that is no. As long as you abide by the criteria that the regulatory body allows for R&D credit, the answer might be yes. So what I would say is go back, ask your tax provider, ask your tax prep provider or your consultant, can you get an R&D tax credit for what you're doing? By the way, you can go back 3 years and get tax credits, 3 years. So let's say you've been doing something that's innovative, really cool, right? You're due tax credits for those potentially up to 3 years, even sometimes even longer, depending on the circumstance. And R&D tax credits are way better than deductions because it's a dollar for dollar. So let's say, we did, I'll give an example. We were doing a deal for an attorney in California. She ended up getting 58 cents on the dollar for what she was spending. So meaning, as far as her R&D tax credit, that was money in her pocket that she didn't even realize that she was due by the government. There you go. Can I get R&D tax credits for improving a given technology? If you've not only researched and developed something on your own, but improving on your own situation, the answer to that is yes. So it's got to be something material, depending on the regulatory body. It's got to be something material. It can't be something that's run of the mill. It's got to be something innovative. Hence the reason you get the R&D tax credits, research and development tax credits. That's a big thing of what we do. And I'm going to give an example of what I do. Again, Kenner French with vastsolutionsgroup.com. What I do is, or what I did, we put together the VAST Institute years ago. And basically what we did was 20% of all the revenue that came into our company, we put it into that VAST Institute, research and development, if you will, think tank. It was only me, by the way, that was doing no, not true. Me and one of the group that was doing the work, me principally. By doing that, one, it helped me in the marketplace because we were innovative. Two, all the money that went into there was research and development. I knew I was going to get a tax credit, and I knew 20%, no matter what, was going to better our company because we were using it to push the envelope. It made a huge difference. One, for taxes, because I knew the government was giving me money to, obviously be an innovator. Plus, again, the marketplace, I was totally unique because we started doing something that was totally unique. Research and development with, at that time, artificial intelligence. That's why we became the group as far as for small business owners, solopreneurs, helping businesses lower tax liability because we were doing R&D, mainly finding good solutions for artificial intelligence to lower tax liability for businesses. I do have to apply for R&D tax credits every year. Well, you don't have to apply, generally speaking, again, depends on the regulatory body, but federally, just like you do your taxes, you do a tax filing, a number of tax forms, and you have to back it up, by the way, indicating that, yes, there's R&D being done by your company, what your expenses are as far as R&D, but there's not an application process. It's just a filing process. And by the way, sometimes the government will come back with questions. But on top of that, as long as you're doing it the right way, you have someone helping you, your tax provider helping you to identify, R&D activities, meaning to lower your, overall tax liability, but more than anything, to figure out what you're spending on R&D. It's an easy process because just like you're filing, your 1040 and all your forms, just throw all these forms in there as well. And again, if you're already doing the innovation, you might as well get paid for it by the government. It's as simple as that. By the way, I'm going to talk about something much bigger. If we, as humans, are going to succeed in this ever-changing wild world, we need to innovate. We need to innovate and make ourselves more efficient, right? We need to better humanity with technology. So it makes sense that governments give you tax credits, as we call them R&D tax credits. It makes a lot of sense. Now, I'm not saying cheat, lie, and steal to get the tax credits. No, that's not what I'm saying. So many people are doing things that should be getting R&D tax credits. All you have to do, ask your tax provider. I mean, By the way, not only going backwards, not only going back to the prior year, when you're doing your taxes for that current year, going back to the 3 years, or, well, in that case, it would be 3 years before that, but also going forward. If you're orienting your business to be able to get tax credits, R&D tax credits, you're going to be seeing, I should be spending more time on that. And again, not only are you lowering your taxes, but also, two, you're being more innovative and you're helping your clients, right? I don't care if you're selling a widget or what the case is, but at the same time, what you're doing is you're helping humanity. So those are things that, I totally understand why the governments are giving R&D tax credits, because it makes sense in so many ways. Anyway, I'll quit beating the drum. As you can tell, I'm a big believer in research and development, because I think humanity, like right now, one of the big things that we're doing, quantum computing, and the reason we're doing that is it helps so many people, so many entrepreneurs, especially for the small solopreneur who's struggling. If we can help get quantum computing into the marketplace for solopreneurs, holy mackerel, I can only imagine what's going to happen in the future, because quantum computing is going to blow away artificial intelligence. Blow away. I'm so excited for that. I just hope I see it, by the way. We had a compliment here from Deval Patel, who's a great marketer, great entrepreneur. He said, we're the best in the biz, highly recommended. Why did we say this? Because I wanted you to know, as you're watching this Q&A, I'm going through it very quickly. I want you to know that we do take care of the client. Not only are we into, research and development and really pushing the envelope, but we also want to make sure the client's taken care of. And hence the reason Deval Patel said we're pretty darn good, which was a huge compliment from such a luminary as Deval. Real quickly, I want to go over our Vast Vault community, where you can find a lot of our information here at vastsolutionsgroup.com. We have community expertise. We have people who are, working with the community, who are providing their expertise. Sharon Lecter, Rich Dad, Poor Dad, as a matter of fact, you've probably heard of her many times over. Very experienced CPA. Laurel Langmeyer, the millionaire maker. Jonathan Kronstad, who started Kajabi, who was a co-founder of Kajabi. Bob Bloom, that as I mentioned, with vastassetdefense.com, and also Asset Defense Team. Patrick Smith, our CPA here at vastsolutionsgroup.com. We have expertise in this community. It's $199 a month. If you're looking for expertise and you don't want to swim alone as an entrepreneur, this is one of the places that you could swim with others. Resources, content library, over 500 forms, documents that are free of charge. If you're a paying member of the community, videos, audios, and publications that are specifically tailored really to real estate investors or media types, so they can get ahead, because it's a crazy world out there. It truly is a crazy world. We've put together literally all of our resources for business owners who are in the same boat we are, traveling down turbulent waters, turbulent rivers that would be entrepreneurialism. Collaborate. We have over 500 people in the paid for community. Luckily, we have people who are collaborating and really growing together. They're connecting with other people in the community to get that much better. And that's important. I keep, as an entrepreneur, I keep thinking about the fact that sometimes it gets a little tough out there. And one way to make it easier is by collaboration, growing within the community, and hopefully then the community becomes that much more potent and big. Cutting edge. Very few places will you have the resources and the content that we're providing to the community as far as new technology, new information, and it's as cutting edge as it gets, all for $199 a month. All based on our black box called Einstein, as I featured a few moments ago. Einstein's made the difference for us, and we believe it'll make the difference for you. Real quickly, once again, an example, and by the way, I said we're going to have some couple of bonuses for you. I should say at least one bonus for you. So stick with us here. An example of our services: tax strategy. Are you paying too much in tax? Well, that's one of the things we do. Tax strategy. Do we also do tax preparation if you want your taxes prepared? Less so, but we do taxes. The biggest thing that we do is using artificial intelligence to help with tax strategy. Bookkeeping. You need bookkeeping for your entity or your real estate. We do bookkeeping. Property finance. Again, as I mentioned, we do help with financing for real estate deals. And also if you need business automation, that's new for us. we've been doing it for ourselves, artificial intelligence for ourselves, but now we're doing it for others here and there, depending on the circumstance. That's by application. So those are the example services that we provide. I said there's going to be a little book here, the Entrepreneur's Manifesto, a collection of smart financial advice. I'm Forbes.com former contributor for small business owners for Forbes.com. I put together a number of different articles that I think now more than ever help entrepreneurs to tackle the craziness that is entrepreneurialism. And the Entrepreneur's Manifesto, a collection of smart financial advice. It is a fun read. It's a very quick read, easy read, and this will add some value. If you email info@vastsolutionsgroup.com, info@vastsolutionsgroup.com, you will get a copy of your book. And by the way, give us your address and just write the book in the subject line and we'll send you over a book. So interestingly enough, I can't say goodbye first without giving you our contact information if you have any questions, any more questions, because we're going to have many, many questions with Kenners as we have had in the past. We're going to continue to do them. Overriding theme, vastsolutionsgroup.com, vastsolutionsgroup.com. Go to our website, go to the menu, contact us. If you want one of our services that we talked about, go ahead and fill out that form. Again, that's our contact us. Tell us exactly what you want. We're here to help you. We'll make sure we reach out to you. If you're an existing client right now, again, you probably know this, vastsolutionsgroup.com. Go to support and fill out that. We'll be happy to help you for whatever support you're looking for. If you want to be a part of our community, I mentioned the community, $199 a month with over 500 people. Go to vastsolutionsgroup.com, click on the menu option, Vast Vault Communities. Sign up if you're interested, or if you want to get more information. We do have a free portion. You don't have to go the $199 a month route, $199 a month route. You can also go to the free community. It's going to have a little bit less information, but what I would say is, if need be, you might even be able to do your taxes based on all the information we have, even on the free side, especially if you're a new entrepreneur just starting out. By the way, if you're a new entrepreneur just starting out, you're a W-2 employee, it still makes sense to have an outside entity, an outside gig. Who knows? Maybe that outside gig is going to end up being as big as Google going forward. Or at the same time, who knows? Maybe you want to lower taxes. One way of doing that is by having an outside gig. Now, remember the book, info@vastsolutionsgroup.com, Entrepreneur's Manifesto, a collection of smart financial advice. And then finally, we do have an app out there, the App Store, the iOS or Apple Store, and then also Google Play, and it's called the Vast Vault. We'd love it. We'd love it if you use the app. I spent a lot of money and time working on that. I love it. It's added some value. I'm surprised how many people are now giving us feedback that they wanted us to have an app. I knew people wanted us to have an app, but I didn't know to the extent. So it's really cool. Now, does your advisor have an app that you could, be on the fly and ask questions? Because all of our services go through the app going forward. Wow, this has been fun. Hopefully this has been helpful to you as an entrepreneur, because I can tell you I've had fun. Again, this book, the reason we're giving this book, it's an added value. You will be happy that you read this book. This will potentially help you to lower your taxes, put more money in your pocket. And what I would say is thank you for taking the time. I know you have a lot of things you could be doing. You could be, watching TV, you could be reading. Hopefully in some way you've gained some knowledge that will be able to lower your taxes, increase your net worth, whatever the means you need to do to help your situation. And we're here for you at vastsolutionsgroup.com. Thank you.